Hey, this is Jim. It's 8:06 p.m. in San Francisco, California on May the 30th. Please note that all discussions, analysis, and information presented are for general informational and educational purposes only and should not be construed as financial or any other form of professional advice. So this is actually tracking nicely and looking encouraging here. I'm going to go over the volume characteristics first. Then I'm going to jump over to that really dead simple fractal that I showed you in the last video several days back, where we were looking for price to run down through stops and put us in a good position, turn back around, sort of like we've been doing in the past. So if you guys have watched my other videos, you know that I like to focus in on these volume fractals here, and you guys can go back to the previous videos if you're a first-time watcher, and you can look at sort of the logic behind all of these notes here. But you can see this yellow downtrend line here. This is a volume fractal here. This is another downtrend that defines a volume fractal, and then this is the most recent one we're in. Those white lines at the bottom are really important. That's what I call nesting or resting volume. And what we look for here is as volume falls down into this wedge, we expect where you have this collision point where the downtrending volume collides through the nesting or resting volume. That's where we expect to start to see volume pick up in the form of these spikes. And then what we want to see after that, obviously, is we want to see that as these spikes, the spiking volume in between these pullbacks and the resting periods, we want to see green bars, meaning green closing 60-minute bar higher than the previous bar as the volume continues to increase. What the bad guys want to do is what they were able to do when they stopped the last advance, and they want to be able to paint a red bar and turn trend back down. So as long as we can increase two different things, we want to increase our volume spikes to the upside on green closing 60-minute bars, and then importantly, we want to see this nesting and resting volume continue to firm up and increase. So you can see from the level of these horizontal lines over here that we're well above. We're like 4x where we were here and at least double where we were back here. So that's a really good sign. That means that we're sort of running through this quiet before the storm period we've talked about and getting ready to see some action. Obviously, the BAM model is predicting zones of strength ahead. So as volume increases, we're assuming that that's going to track, and it means price is going to move higher. I will show you guys that dead simple approach next, and then we'll bounce over to the lower time frame 5-minute fractal. So again, this is dead simple. This was the lowest low. We had this up, down, up. They run through stops, right? Here's a logical place where people will place stops. They run through stops and then rip to the upside on a speed line attack. You have this tiny throw over here, wiki throw over, and then they move down. Now, to really demoralize people, they ran back through to another low again and again. So that sets up a new point of origin, and this is sort of a miniature version of what they just ran through over here. Although the up, down, up sequence is really similar to this up, down, up sequence here. What we found was in the stop running leg here, where this was unfolded very rapidly as far as the number of 60-minute bars. This one, they really have slowed the algorithms down. Matter of fact, today, if you paid attention to that 25 tick bar activity, at times I looked down to see if my data feed was killed because it looked like the stock was not trading. It looked like my connection had been killed. So anyway, in that last video we talked about, as we said, at this point, since we were in this grinding decline, we would rather actually see them run through stops and take care of this 455 hidden retest level, which has happened now. So you can see from the last video, we had this question mark stop running. Now, if we track the zone of strength ahead, we'll be attacking the speed line sort of into this price and timing box right here. Again, I told you guys, based on the Anemoi terminal, which is a completely separate company that I have that specializes in price velocity and predictive price velocity. The price velocity has been absolutely killed in AMC. So anyone that you guys are following that thinks that we're going to turn and we're just going to move straight to new all-time highs, I think they probably have very little experience in tracking markets and really understanding sort of the wind up and the back and forth that's required before you can take off on a really dynamic move like that May, June 2021 period that the model did identify, and that we posted in live videos that are still up on the YouTube channel. So again, if you guys are familiar with my behavioral analysis model, you know that when a hidden retest is created, which is what this is right here, a fast market break through a confirmed trend line, that once we have that retest hit, we expect to see what's called a vibration sequence, which is unfolds in an A, B, C, D, E minimum vibration sequence. So this would be the A all the way up. This contacts the B. What this means is unless we get some flopping here, what we'll probably end up seeing here is this attack of our price and timing box. And then at some point down the road here, they'll come back down again and we'll have to finish out the rest of the vibration sequence. So it would look something like this: A, B, C, and then we'd have to come down here with a D, E, and to take care of that. So we won't borrow trouble for the time being, but this is going to cause me to be looking over my shoulder if we go ahead and take off into during the next 2 weeks into this zone of strength that the behavioral analysis model is predicting. Here's what the 5-minute time frame looks like. You guys can see that these anemoi triggers continue to drift lower, and we'll be in a position here to fairly easily break this hourly trigger tomorrow or the next day, at which point we have a little air pocket here up to this anemoi daily trigger at 514. That daily trigger will continue to drop about 3 to 5 cents per day. You can see these hidden retest levels here labeled in magenta. The reason those are important is because this tells us that this is sort of a slingshot setup to where once this starts to take off, price will want to attack the hidden retest level, which means it creates a high velocity event through these trigger levels. So here's the way I've sort of mapped this out. The most dynamic upside in my work would set up for the following week. This is sort of another repair week, and we wanted to run through the stops like I showed you in that last chart. We wanted to hit that hidden retest level, so we've checked both those boxes. Now we're ready here to start this slower climb. I don't expect us to blast straight through these tomorrow, but by the time we trade into sort of this timing element here, we should be able to, if I have this whole thing mapped out properly, we should be able to slingshot up through all of these levels and attack this Anemoi monthly trigger. Now, remember what I told you guys about this setup here. We can see it's not uncommon to see a little throw over on a speed line attack like this. And again, if we attack this speed line into this timing element, that's only sitting at about, $6.70. Well, I just was talking about the 805 Anemoi monthly trigger. So obviously that would be a large overthrow. It'll be interesting if we can track into this time and price element. And if we can see that overthrow, if we can not only throw over and stick against that 803 Anemoi monthly trigger or move toward it toward the end of the month of May, I mean, if it could happen that quickly, we'll repair the monthly velocity moving into the month of June. So that would actually be encouraging. If that doesn't happen, but we can at least make some upside progress, that still helps us to repair that monthly velocity for June, which would allow us to release up above that 803 monthly trigger and move more toward some of the hidden retest levels, overhead 12, 14, as high as 21. Now, I don't expect that to happen during the next 2 weeks, but if we put in the right type of price action this week, it's not out of the question for us to be able to take off and start to take out some of those upside hidden retest levels into next week. That's really the most dynamic looking portion of this current setup. quick look at the 240-minute price bars, and then I'll wrap this up. You guys, this is a little noisy, so you might want to pause the video and take a look at some of these things if you're not used to my work. But the real takeaway here is that this is considered an expanding megaphone melt-up fractal in my work. This would be the primary. That's why I've marked this with a thicker yellow line. Both of these, the primary uptrend and the secondary uptrend, have a common speed line, and that's this thick white speed line. If we can move up, and you can see they've slowed this algorithm down so much that we're moving toward the very tail end of this timing box. But if we can start to move up and move above this secondary uptrend line, that would also coincide with the break of this May price high. We can start to really accelerate, and that would put us in a position, like I said, to start to move above that 803 Anemoi monthly trigger. And then if we were to move into, let's say, if we could remain above 803 next week, into next week's close, that would put us in a position to re-enter above this thick yellow primary uptrend line from this expanding megaphone melt-up fractal. And then we could start to really pick off some of these retest levels. And so this is what I talked about in the previous chart. This 1375, 1550, 2175 even. This pay me later level at 1680 was created right here, where we had a dropout, a re-entry, and then they came in and did the lulled limit up, limit down, halt, and as they've done in almost every other advance, because they need to buy time. They cannot let this stock start to run yet. They want to try to really do what they're doing here, which is let the stock spend as much time down in this $450 to $550 range, so that they can get some work done and mitigate some of the risk. Remember, they thought the reverse split was going to have happened already back in here. So they have to deal with a whole extra month of time. We have to move all the way into the end of the month before the judge even hears this case. And that means that every day that goes by, these guys risk an external market disruption. I keep talking about this forced liquidity event that I think might be coming. And all that means is that we have 30 days to see some kind of a major market average decline. This would have to be a major market average decline, I believe, which would then in turn create a liquidity panic, which would create forced short covering against a declining long side of their book. There are a lot of stocks that they want to hold on to. So if they need to raise cash levels, instead of puking out an Apple or an Nvidia or something like that they want to show on their books at the end of months, weeks, or quarters, sometimes what they'll do instead is go and do a little bit of work against the short side of their book and do some short covering there. That's what we hope. That's it from my side. Good luck, you guys.